Welcome back to the Money and Wealth Show. Our special guest this week is David Smith. David is a frequent contributor to the Morgan Report at silver-investor.com and very knowledgeable in both the gold and silver sectors. Let's talk about those compared to each other. First of all, silver has the constant knock of being the poor cousin to gold, and yet it's darned attractive for a lot of people because it's cheaper to get into. So how's it doing?
Especially at gold being over $1,000 an ounce,
exactly.
Where it was $250 10 years ago. Silver is still relatively priced in regard to that. Historically, it is often traded at 15 to 1 with gold, and now it's about 50 or 60 to 1. So
right.
The relationship there is enough to make a person want to buy some silver.
And are they?
They are. We're in the United States. We're selling record numbers of the American Silver Eagle. I think they sold like 4 million in January of this year, which is most years they don't sell that many for the whole year. So investors are buying it. They're buying the bullion, other types of bullion coins, and 5 and 10 ounce bars and 100-ounce bars. So there's a tremendous investor demand. And by the way, it's the first time in 2006 that silver investors were positive. In other words, they're buying more silver than they were selling, and they had been selling more silver since the peak in 1980, and that was reversed in 2006. Now for gold, that trend was reversed last year, late last year, when the Indian Central Bank bought 200 tons of gold from the IMF, and that made the central banks, for the first time since I think about 1971, that they bought more gold, the central banks did, than they sold. These two developments are very, very big for underlining significance and health of the secular bull market in gold and silver, in my view.
Is part of it the reason for this activity, and quite a great deal of activity, again relating to economic uncertainty? The debt load that your country and mine is carrying right now is shocking and getting worse, not better. People are aware of this and are looking to insure themselves and their futures in some way. Gold for thousands of years has represented that to a lot of people. Still the case?
I think that is, and that's not the whole picture, but it's a big piece, and it's the most obvious picture to people watching the news, because in many ways we have a perfect financial storm going on with all the uncertainties of economics. But as you said, gold and silver have been honest money for 6,000 years. In the Punjab, farmers bury a bag of silver in case they have a poor harvest. You can take a gold coin to the jungles of Africa, and you run into somebody there, and they will know how much a troy ounce is going for that day, and you could sell it just like that. So no one has a claim on your gold except you. But I think also where some people make a mistake, they say, well, if you think gold is going to $2,000 or $3,000 an ounce and silver perhaps over 100, which I happen to think is very possible in the years ahead, that must mean that we're going to have a societal collapse. And that isn't necessarily true at all, because just based upon the fundamentals of supply and demand alone of both gold and silver, we can have much higher prices just to bring supply and demand back into balance.
What percentage should an individual think about, David, in terms of gold or silver, physical assets, the coins, the bulk bullion in some fashion, versus stock in gold and silver mining companies?
Well, you know, David Morgan at the Morgan Report recommends that people get the physical first. Buy some physical gold and silver, either in bars or coins that carry low premiums over the actual spot price. And for example, now silver can be had in most places for about $1 over spot. So if silver was $16.50, you would pay $17.50.
Okay.
And that premium, it has to rise to that level for you to break even. Gold, maybe $75 for a maple leaf above spot price, or Kruger Rand, something like this. But a part of it will depend upon your philosophy, what you think gold does in relation to silver in terms of potential. But a lot of people feel that when gold doubles, if gold doubles, that silver will go up about 4 times. So the actual percentage of profit that you would make with silver could be substantially larger based upon the same amount of money invested.
So in addition to the split between physical assets versus stock, you're recommending, if I may infer, that a mix of gold and silver is practical and smart.
I think a strong consideration for people to ask themselves about doing both gold and silver, because if that spread narrows from where it is now, 55, 60 to 1 on gold, silver, if it narrows, say, to 20 or 25, that's a substantial, even with both of them going up about the same amount, that's a substantial difference in price.
And keep in mind, too, that as Dave has just mentioned, in the first few days of January 2010, Americans bought essentially all the silver that they bought in 2009. So a year's worth in a matter of a few days. That says a lot about where the population is headed and what they're thinking about these days.
It really does. So a lot of people understand the silver story, and you know, Ted Butler has been one of the foremost exponents, along with David Morgan, about the silver story, and he believes that as much as 90% of all the silver ever mined since the beginning of recorded history has been lost in industrial applications because you use a small amount in things like electronics that can't be recovered economically. And if that's the case, then technically there's less above ground silver than there is above ground gold. So that's a compelling situation.
Interesting stuff. Our guest this week is David Smith, and we're back with lots more here on the Money and Wealth Show after this.
Good afternoon. My name is Larry Ray. I'm the chairman and CEO of Molycorp Gold Corp. As the name states, we do have a deposit we're developing in British Columbia, which is a pure molybdenum deposit. But our focus these days is on magnesium in Nevada. Through serendipity, we discovered a large deposit of magnesium running about 10% with a high purity and consists of about 256 million tonnes at this time, 52 billion pounds. Our main emphasis is to move this project forward by beginning a drill program later this year in which we can increase the integrity of the resources into the indicated and inferred, as well as increase the resource itself. For further information, please visit our website at molycorp.com or phone us at 604-531-9639.